It's been a very strong set of numbers for Steel Authority of India, or SAIL. The PSU steel maker has managed to record the highest ever EBITDA. This aided by extremely strong pricing. And what's more is the management has said, to analysts that this strong pricing is expected to continue in the second quarter as well. So that's extremely encouraging. So we had the revenue figure which came in at 20,642 crore rupees. The EBITDA was at 6,564 crores, margins at around 31.8%, because remember in the corresponding quarter the company had posted an operational loss. It was an EBITDA loss of 400 crores, so very sharp turnaround, and the profit after tax is at 3,850 crores versus the loss figure that they posted of 1,270 crores. Now first up, let's talk about volumes. It did obviously see a nice bump up, 3.3 million ton versus 2.2 million ton, but mind you, the volume has declined on a sequential basis. Almost 24% drop is what we have seen in the volumes compared to the previous quarter. The reason being that, the second wave did obviously curb operations for SAIL. There was the whole oxygen diversion bit as well. But guess what? Where it lost in volumes, it has more than made up in realization. Steel prices only moved higher in Q1 as well of FY22, which is why the blended realizations continue to move higher, 16% higher on a sequential basis, which is pretty noteworthy. Their blended realizations are 62,000 per ton. In fact, a little more than that, which is very impressive. In fact, I think it beats even JSW Steel's standalone realizations. But it has lowered its volume guidance to 16.5 million tons from its earlier guidance of 18.3 million tons. Even the coal costs have surged quite a bit, a 30% sequential rise. The other big factor is the employee expenses. That too has increased in this quarter compared to the previous quarter. But remember, there is a wage settlement negotiation going on right now, and I think that's expected to be finalized in the second quarter of FY22. So that will be a big tailwind as and when it is done. On the balance sheet front, they've managed to cut down debt again. In this quarter as well, the net debt has declined further to now just about 31,110 crore rupees versus around 36,700 crore rupees in the previous quarter. So it's been a good 5,000 odd crore rupee net debt reduction seen during the quarter. The interest cost as well declined almost 7% compared to the previous quarter due to all of the debt repayment being done. On the capex front, they said that they have this two-phase expansion plan for FY24 onwards. And the first phase will expand capacity by 12 to 14 million tons. Remember that SAIL recently came out of a very elongated capex cycle, post which its capacity is at around 21 million tons. So now it will start its next phase. It's going to take a little while, of course, but yeah, 12 to 14 million ton is what is planned for phase one. But most importantly, we've been seeing a little skittishness come by in steel prices in this last 1-2 weeks, in this last 1 month, in fact. But SAIL says that their average pricing for Q2 will stay as it was in Q1, which is very encouraging.